Hello, my friend. Welcome to Charlie Retail Invest. Let's track the latest trend in US economy and share our recent investment in stock and bond markets. In today's video, I will bring you detailed analysis of two mega cap stocks. Yes, Apple and Eli Lilly, which we are very familiar with. What these two giants share in common, besides being number one in the technology and pharmaceutical sectors respectively, is that their stock prices have both broken out to the upside in recent days, especially for Eli Lilly, which has experienced a V-shaped recovery within a week after its stock price plummeted over 15% on August 7th, after its phase 3 oral weight loss drug's efficacy fell slightly short of Wall Street expectations. So, can we still buy Eli Lilly and Apple stocks on the right side? I'll give you a detailed answer below. Well, let's talk about Apple first. On August 6th, Apple CEO Tim Cook visited the White House and presented Trump with a very exquisite Apple Glass artifact with a 24,000 gold base. Cook also announced that the company will invest an additional $100 billion in the United States over the next 4 years for manufacturing. This new investment is the first of its kind in Apple's expansion of the announced $500 billion investment plan that brings Apple's total commitment to US domestic manufacturing to reach over $600 billion. The investment will be primarily used for expanding Apple's procurement of American companies and domestic components. Apple will invest in Arizona-based Amkor Technology, a chip testing company and packaging plant. This plant will be responsible for processing TSMC's nearby factory that makes Apple chips. At the same time, Apple also announced a partnership with Corning to build a glass production facility in Kentucky to produce screens for iPhones, iPads, and Apple Watches. After Cook's kissing the ring to Trump, Apple stock price finally broke from nearly 3 months of sideways trading. Over the following several days, the stock price surged over 10% from $209 to around $231 on August 15th. Cook's visit to the White House was crucial in regaining the favor of Apple from the Wall Street. In the past 6 months, Apple's market capitalization has been surpassed by Microsoft and Nvidia, and with Nvidia becoming the first company in human history to surpass $4 trillion in market value. Apple's current market value remains at $3.43 trillion, which is still more than 16% away from reaching $4 trillion market cap. Considering Apple is the first stock in history to surpass $1 trillion, $2 trillion, and $3 trillion benchmark, and in the surge of AI, Apple's popularity is being gradually overshadowed by tech giants like Nvidia and Microsoft. This raises the question, what are Apple's plans going forward? How will its product demonstrate its unique value in the application of AI? As a technology giant with a hardware background, Apple is actively exploring the application of artificial intelligence in new hardware products to expand its boundaries of smart ecosystem. Apple plans to launch the screen smart speaker and AI security cameras. These devices will serve as the core of the smart home system and can achieve home automation and enhanced security features. Additionally, Apple is developing a number of robots, the most popular of which is a desktop robot expected to be launched in 2027. It's similar to an iPad mounted on a robotic arm, which can follow the user's movements, provide virtual companionship, and task assistance, and is regarded as a core product of Apple's AI strategy. The company is also exploring the use of wheeled mobile robotics and with more movability. In terms of its software services, Apple will upgrade Siri to make it more natural, language processing capabilities, and making it capable of handling more complex requests and even function in between different applications. Of course, I believe that the key to directly pumping up Apple's stock price in the short term is Apple's latest smartphone, the iPhone 17 series, which will be released on September 9th. In this new product launch, Apple is likely to launch a thinner and lighter iPhone 17 Air to replace the previous Plus model. This new model will adapt a large screen size similar to the iPhone 17 Pro Max, but its configuration will be closer to the standard iPhone 17, forming a new product line. At the same time, the iPhone 17 Pro series may adopt a new design with a full-width horizontal camera module, which will make the back of the phone look simpler and provide more space for internal components. Of course, the hardware updates, including higher pixel cameras, more durable body materials, etc., will not actually bring any difference to users compared to previous iPhone 15 and iPhone 16 models. We are mainly focusing on AI-driven software systems and what kind of innovative features they might have on Apple products. In addition to the more powerful Siri, as we mentioned earlier, which can help you summarize an article or automatically create reminders based on your schedule, iPhones will add new AI features that allow you to generate unique pictures or emojis through simple text descriptions or intelligently remove unwanted objects on photos. Additionally, iOS 26 will introduce a new feature called Adaptive Power. This feature will intelligently adjust the performance of the iPhone based on your current usage, thereby objectively expanding battery life. Overall, I'm very looking forward to Apple's iPhone 17 launch event. With the Federal Reserve cutting interest rates in mid-September to stimulate the economy, our US citizens will be more motivated to use our credit cards and buy new iPhones. Lower loan interest rate will reduce the pressure on our common people to repay our credit cards, allowing the consumer market to recover from its slump and become even stronger. This will definitely help stimulate Apple's iPhone sales, increasing the company's revenue and boost up Apple's stock price. Okay, having said so much about Apple's recent news, let's now look at its fundamentals and the most likely stock price trend in the coming months. Apple's current PE ratio is 34.9, which is very close to Nasdaq 100's PE ratio of 33.8. Its 1-year forward PE ratio is 29.9, which is okay, but its operating profit growth rate is slowing significantly in these 2 years. This directly leads to its PG, that is, the ratio of price to earnings ratio relative to earnings growth, being as high as 3.7. In general, for a growth company, we are hoping that the PG would be as low as possible because that means that the company's growth rate must be greater than the stock price growth. If a company's PG is less than 1, it indicates that the market is undervalued by the market despite its rapid growth. Conversely, if a PG is greater than 2, that indicates the company's growth rate is relatively slow and its price is overvalued by the market. And a PG in between 1 and 2 indicates a relatively reasonable valuation for a growing company. Okay, let's make a comparison between Apple and other giant tech companies. So Apple's PG is the highest, over 3, and it is higher than Microsoft's PG at 2.9, Amazon's PG at 1.8, and Google's PG at 0.9. So we can safely say that from a fundamental perspective, the current share price of around $230 is not cheap for a technology company with slowing growth like Apple. From the EPS growth rate forecast that Apple's EPS growth rate in 2025 and 2026 will also be relatively low at 9% and 7.9% respectively, which is lower than the average EPS growth rate of 12% for the S&P 500 index. However, Apple is not just any tech company, it's a leading enterprise with a deep moat, ample capital, and the support of a large number of Apple fans. Therefore, it is perfectly reasonable for the market to give Apple stock a certain premium. With the launch of Apple's iPhone 17 in September of this year, we are likely to see that if the sales of the new phone are better than expectation, Apple's EPS will continue to be revised upwards in the next few months. This will further stimulate the rise of Apple's stock price. I believe that with the Federal Reserve's interest rate cut and the hot sales of the iPhone 17 series, Apple's stock price is very likely to continue to break through to the right side in the next 4 to 5 months. And before the end of this year, it may reach to its historical high of $260 per share that was set in early December of 2024, and it would continue to break through to create new historical highs. This means that if we buy Apple shares on the right side at $230 now, we can get at least 12% profit in the next 6 months. This profit-loss ratio is still very good. And especially it is true considering that the risk of our investment in Apple is very low, because Apple has a very strong cash flow and it regularly repurchases its shares back to boost up the stock price. So the possibility of being locked in for long term is essentially non-existent. It's very defensive. Of course, expecting Apple stock price to surge by more than 50% in a single move like Nvidia does is unrealistic. Therefore, we don't need to buy a large position in Apple. A modest allocation of capital around 3% to 6% of the entire portfolio is okay. On August 12th, I personally bought 45 shares of Apple with an average purchase price of $228.9, representing 3.3% of my entire portfolio. And I plan to hold the stock until it reaches a new all-time high before selling it to cash out the gains. Okay, let's talk about Eli Lilly after Apple. And we know that being the world's largest pharmaceutical company is not simple. On August 7th, when Eli Lilly announced its second quarter financial report, the company also released data from its phase 3 clinical trial of a new oral weight loss drug, orforglipron. The public was very excited about this oral GLP-1 weight loss drug initially because it was a much wider audience than the currently popular injectable weight loss drug, as many patients are quite afraid of needle injections. However, clinical trial results showed that even the highest dose at 36 mg of Eli Lilly's oral weight loss drug only reduced patients' average weight by 12.4%, which is lower than the market expectation of 14% to 15%. More importantly, Eli Lilly's main competitor, Novo Nordisk, previously announced that its oral semaglutide reduced the average weight loss of subjects by 13.6%, and its efficacy was better than Eli Lilly's oral weight loss drug. This news is definitely a small defeat for Eli Lilly and a victory for Novo Nordisk. As soon as the news broke, Wall Street went ballistic. Although Eli Lilly's second quarter earnings report far exceeded expectation and it also raised its 2025 earnings guidance, the stock price plummeted 15% on August 7th from $750 to around $630, hitting its lowest point in a year and a half. I bought a significant amount of Eli Lilly stock before the earnings report, and after deep research, I didn't panic sell the stock on August 7th. On the contrary, I bought more shares on the dip, and I also bought double-leveraged Eli Lilly ETF LLYX. When others are fearful, I'm greedy. When others suffer small loss, I go bankrupt. Just kidding. It's because I've been working in the pharmaceutical industry for many years and have had very deep research into the pipelines and fundamentals of major pharmaceutical companies that allowed me to invest in Eli Lilly heavily. And if you're just starting on investing in stocks, don't rush. Try to buy on the right side and play it safely. After Eli Lilly's stock price fell below $640, its CEO David Ricks, in an effort to demonstrate its confidence in the company's long-term prospects, has personally purchased over $1 million worth of Eli Lilly stock out of his own pocket. And several other executives also brought Eli Lilly shares totaling $2.9 million worth. Of course, for Ricks, his total salary last year, which is in 2024, was as high as $29.9 billion. So spending $1 million to buy his own company stock is just like ordinary people buying a piano or a high-end Apple computer. It's actually not that bad. And in May of this year, Stephen Hemsley, the newly appointed CEO of United Healthcare, did also purchase $25 million worth of UNH stock out of his own pocket at a price of $288. However, UNH stock price continued to fluctuate and decline over the next 2 or 3 months, falling to as low as $234 per share. It wasn't until August 14th when news broke that Warren Buffett had secretly purchased over $5 billion worth of UNH stock in Q2 that the stock price finally rebounded, reaching over $300 per share. Additionally, in response to Trump's administration's pressure to lower domestic drug prices in the US, Eli Lilly announced on August 5th that it would increase the prices of its drugs in EU in preparation for reducing the pressure on American consumers. Eli Lilly has reached an agreement with the UK government to significantly increase the price of its weight loss and diabetes drug Mounjaro. In the UK, the highest dose of Mounjaro will be priced at £122 per month. The price of the drug has risen to £330 with a whopping 170% price increase. This is very beneficial to Eli Lilly's operating profit. Of course, on the other hand, for British consumers, if they receive a private prescription or online pharmacy, then buying Eli Lilly's medicines will result in higher prices from now. Now that we've covered Eli Lilly's recent news, let's take a closer look at its fundamentals and stock price trends. Hopefully, this will give you more confidence in investing in Eli Lilly stock. First, Eli Lilly's current PE ratio is around 42, which is significantly higher than the healthcare industry average of 23. This is primarily due to the explosive sales of its GLP-1 weight loss drug over the past 2 to 3 years, which led to rapid EPS growth. Wall Street really likes companies like Nvidia and Eli Lilly, which offer both stable leading company revenue and rapid profit growth. As a result, Eli Lilly's stock price tripled from $315 in 2023 to over $940 in summer of 2024, so in less than 1 year and a half. Of course, after that, Eli Lilly's stock price didn't break through the $1,000 mark as analysts had predicted, but rather instead fluctuated downwards, falling to around $630 in early August of 2025. Even so, its price-to-earnings ratio remained elevated. However, precisely because its EPS growth is so strong, its forward PE ratio in 1 year is at only 23.1, and its PEG is only at 0.6, which is definitely temporarily undervalued by the market. Looking at Eli Lilly's EPS growth forecast for 2025 and 2026, we see that there is a 74% EPS growth in 2025, with continued strong growth of 33% in 2026. With Eli Lilly's flagship product Zepbound gradually eroding Novo Nordisk's Wegovy market share in diabetes and weight loss sectors, we are likely to see Eli Lilly continue to raise its revenue outlook in the third and fourth quarters. Furthermore, Eli Lilly's strength over Novo Nordisk lies in its extensive pipeline of new drugs. Beyond diabetes and weight loss, Eli Lilly also has a very competitive new products on the horizon for Alzheimer's disease, Parkinson's disease, immunology, and oncology. This gives Eli Lilly a much deeper moat than Novo Nordisk, making it significantly more resilient to risk. Of course, Eli Lilly's oral weight loss pill is slightly less potent than Novo Nordisk. However, the difference in weight loss efficacy between 12.4% and 13.6% is actually very small. Furthermore, Eli Lilly's oral pill is traditionally small molecule compound, and their production cost would be much lower than Novo Nordisk. This allows Eli Lilly to engage in price wars in the future promoting its own weight loss oral pills at lower prices. Therefore, I remain very confident in Eli Lilly's competitiveness in the new field of oral weight loss pills. Now let's look back to Eli Lilly's stock price. After 3 days of decline, Lilly's price rebounded in a V-shaped pattern starting on August 13th. By the close of August 15th, it had surpassed the $700 market line, closing at $701.23 per share. I do believe that within the next 2 months, there's a high probability that Eli Lilly's stock price will break through $800. Again, if we buy LLY below $700, we can achieve a return of at least 15% in a few weeks, which is a very good profit to loss ratio. Especially considering that Eli Lilly had recently established new pharmaceutical production bases in Indiana, North Carolina, and Wisconsin, in response to Trump's call for Made in America. We are likely to see Eli Lilly's stock price to break through 800 and continue to rise to over $900 per share. In my personal account, I doubled down on Eli Lilly's position, and now Eli Lilly stock is accounting for over 20% of my entire portfolio. Of course, I don't plan to hold Eli Lilly stock for long term. This is because although Lilly's operating profit have grown rapidly in the past few years, if there is a new weight loss drug in the market that is launched in the future, it will greatly reduce the market's expectation for Lilly's growth rate. At that time, Lilly's price might fall from its high point again. So I plan to wait until Eli Lilly's stock price reached above $810 and then gradually sell my position to take profits, thereby achieving a short-term profit of more than 10%. Furthermore, when Eli Lilly's stock price fell below $660 a few days ago, I bought a lot of LLYX, and now I have over 2,870 shares of LLYX, which represents over 10% of my entire portfolio. And I already have made over 4,000 in unrealized profit in my LLYX holdings. I plan to sell LLYX at around $15 after Lilly's stock price breaks through $795, thus locking in a short-term profit of over 30%. And on August 18th, my AI investment system recommended the holdings for US stock, short-term treasury bonds, gold, and Bitcoin ETFs. And my AI system currently predicts that the S&P 500 and Nasdaq 100 indices will continue to decline over the next 2 weeks. Therefore, my system recommends US stock holdings remain at 50% of the entire portfolio. As for the US stock index, including SPLG, SPMO, and QQQM, since their prices are still near all-time highs, I don't recommend buying them at a high price right now. We can wait another few weeks and then buy the dips if there is a decline or pullback. In addition to the index, the system also recommends buying Lululemon stock around $199, buying TTD around $52.3, and buying Salesforce around $241. These rich stocks are safe investments at the moment, and they are still a long way from their respective high prices, offering good returns on short-term investment. Of course, I want to emphasize that these individual stocks are not suitable for long-term investment, but rather for short-term profit taking because their volatility is way too high for the long term. And I've built a very effective AI system that can accurately and quickly identify stocks that have achieved a V-shaped rebound. I will regularly update you with the system's recommended stocks and their recommended buying prices. Please subscribe to CRI Retail Invest to avoid missing out on the updates. This is the latest CRI portfolio holdings as of August 15th. Our main holdings remains unchanged, including AMD, Google, Eli Lilly, MP Materials, as well as Amazon stocks. In addition, we've also doubled down on our holdings in Eli Lilly's LLYX, which currently accounts for about 9% of the entire portfolio. And on last Friday, the healthcare sector XLV and triple leveraged healthcare ETF CRI have strong gains. So we took advantage of this opportunity and have sold half of our CRI position at a high price of $79 with a buying price of $69.7. And within 2 weeks, we've locked in over 12% short-term profits, which is quite positive performance. This is the 2025 year-to-date return for CRI Portfolio as of August 15th. Thanks to the rebound in Eli Lilly stock, our overall return surged to 15.2% in a few trading days, which is significantly higher than S&P 500's 10.6% year-to-date return. We hope that our portfolio will continue to perform strongly moving forward. And that's the whole story of today's video. If you are a retail investor like myself and would like to follow our highly effective AI investment system to make a ton of money and become financially independent, please consider subscribing our channel, CRI Retail Invest. Thank you so much for your time and support. I'll see you in the next video. Please take care.